Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, oil's still on a tear?
Oil is still on a tear. In fact, it's just started a new tear. We saw it have that bottom last year. It had a massive rally up to that $44 level and then traded sideways for several months. And that pattern was pointing to $64 a pattern if it was to break out, which we ended up hitting early this year. And then oil's created another multi-month sideways bullish pattern, a bull flag pattern. And about a week and a half ago, it broke out of that to the upside. The next upside target for crude is $77 a barrel. And after that, it could go all the way up to $88 a barrel based on this chart pattern. So there's a lot of upside potential with crude, and it's really just starting a new run to the upside from here. Current price is $70, $69 a barrel.
Now, OPEC has talked about increasing production, and yet they're still predicting higher prices. Is that because world demand is picking up again?
Oh, most likely. I mean, it always seems like OPEC wants to increase production. I mean, it doesn't matter what time of year, what's going on. It seems like they always want to. I don't really follow OPEC just because to me, it doesn't have a huge impact on things. I like to follow price. I mean, seasonality-wise, we're coming into a more busy season. Lots of travel, and COVID's starting to somewhat free up in a lot of places, so that's definitely helping. Borders are opening. People are starting to travel international again. All these things, I think, are going to continue to have that upward pressure. And it wasn't that long ago they couldn't get rid of oil. I mean, you had to pay to get rid of it. Every pool and lake and pond that you could store the stuff in was full, and yet here we're going to go up to multi-year highs here. And I think it's still going to continue to go that way. It's just the way this market seems to work. Everything's melting higher. And commodities are in favor right now. Currencies are struggling across the board.
Now, with this higher oil demand, does trouble in the Middle East? There seems like there's always something brewing in the Middle East. Is that always part of the equation when it comes to oil prices?
Yeah, I don't follow it. It's probably always part of the equation. I mean, when you look at the price charts, not too often I really link it to some type of event or news. I mean, typically some type of news or event anywhere in the world to do with any commodity or stock is typically just a blip on the chart for 1 to 3 days, and then it fizzles back out. Most of the stuff's generally priced into the market by the time it's kind of heard or learned about by the general public. So it's usually just a short-term blip. So I don't pay attention to what's going on outside of the charts.
Canadian oil and gas doing better than U.S. generally?
Canadian oil doing better than U.S.? Sorry, what was the question?
Is Canadian oil and gas doing better than the U.S.?
I'm not sure, to be honest. I mean, when we look at the oil stocks have been on fire the last couple of weeks, really coming back to life. I think we're going to continue to see them do very well as oil continues to push higher here. We're going to see the energy sector, I think, continue to take the lead. They had the lead early this year as one of the best sectors, and they're really kind of falling back into that groove where money's moving to the energy sector. And if they're in the oil industry, I think those companies and stocks are going to do very well.
Commodities in general still hot?
Yeah, well, commodities. If you look at the commodity index or DBC, which is a general commodity ETF, you can see it's had a huge move. We've just seen commodities, especially oil, and precious metals really come to life in the last month and a half or so. Generally, when we look at a big financial or stock market cycle, when we get near a top of the end of a bull market for stocks, and usually they last 5 to 10 years, when we get to the end of one of these, we tend to see commodities outperform and start to beat the overall stock indexes. And that's what we're starting to see here. Commodities have had this massive run in the last year. Really in the last couple of months, we're starting to see crude oil break out. Precious metals and miners are starting to come back to life. Even the bond market is putting in what looks to be a bottom and could start to rally. And all these things are pointing to a mature bull market for stocks. The stock market could still continue to go higher here, but the market is changing in terms of, I think we're going to see these defensive commodity plays and in sectors and bonds start to outperform the stock market a lot like we saw January, February of 2020 before the COVID crash. We saw stocks slowly grind higher day by day, but we saw precious metals, we saw bonds, utilities really take off and dramatically outperform the stock market. And when that happens, that's a sign that big money's moving into defensive plays, and the stock market's usually on the verge of dropping. And I've been talking about this for a while because it's slowly dragging out. It's starting to play out, and I think we're getting closer every week to getting a clear sign that this is happening. It hasn't fully happened yet. I think we're potentially 1 or 2 weeks away from a real clear break that, hey, money is very defensive. It's risk off at this point. The stock market is literally climbing with fewer and fewer stocks supporting it, and it's about to run out of speed. And when it does start to collapse, it's going to be really quick and sharp. And if you're not prepared for it, you might get a pretty good haircut on your trading account. So we're very cautious. We're actually in cash for the stock market right now until it gives us a new buy signal, which could be, in a week or two if it breaks to the upside, or it could be a few weeks from now after it breaks down and consolidates a little bit more, cleanses itself, and then starts to turn back up.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. How are gold and silver doing?
Yeah, gold and silver, they continue to kind of struggle over the past week. They're both trading up at near resistance levels. They've had a big bout of selling that hit last week. Right now they're really just digesting the recent rally that they've had. They've had a very nice move, especially gold, since the lows back in March, April were put in a double bottom pattern. More or less it's had a run, and now it needs some type of breather, a type of sideways consolidation, a pause in price, where it trades sideways or lower for several weeks. That will build a launch pad, which is called a bull flag, which points to much higher prices going forward. In fact, if it can continue to consolidate here, it'll build a really strong pattern that's going to be pointing to roughly $2,080 per ounce, which would bring us up to the highs that we saw last year in August, the all-time highs. So it's a very good pattern. I think gold's had its run in precious metals. I think they're going to be a little bit out of favor for a week or two, maybe a little bit longer, but they are starting to show signs of life, and I think they could become a leading sector here over the next couple of months.
Platinum and palladium, what are they doing?
Well, platinum and palladium, if we take a look at platinum chart, it's been trading sideways since February. It's holding up actually fairly well. The chart pattern is very bullish long term. Still pointing to much higher prices, but it had a very big run from late last year to early this year. And so it's just trying to work off that run. I do feel like it's going to eventually rally with precious metals. But right now it's kind of testing a support level down around 1150, which is a really critical breakout level on the chart from several years back. So it should find support, and eventually I think it's going to be heading up somewhere around that $1,800 an ounce going forward. And when we take a look over at Palladium, it's pulling back a little bit today, but again, it's got another similar strong chart pattern where it had broke its previous highs from last year, and it's been flagging sideways in a nice bullish pattern. It's primed and ready to rally as well. Pretty much precious metals across the board are testing resistance or building a sideways bullish pattern, and they're all kind of primed and ready to break out and run. It's just they just haven't had that initial surge to break out and start that run yet. So they're still in a consolidation phase. They're not fully in favor just yet, but when they do make that run, especially when Palladium breaks that $3,000 an ounce level, it hit about a month or so ago. When it breaks that, I think it could really have an explosive move and run up to around $3,600, so a $600 move from there. So there's some pretty interesting moves, opportunities across the board.
The Toronto Stock Exchange keeps hitting record highs. What's going on there?
Yeah, well, the Toronto Stock Exchange, I mean, it's very commodity rich. We're heavy in metals, we're heavy in oil, gas. They've all been doing fairly well, and that's one of the reasons why it's moving up. It's almost like a commodity index, you could argue, and of course that's why it's outperforming the U.S. stock markets because it's very commodity weighted. It's trying to it's in this runaway mode where it's just consolidating. It's actually getting to a point where it's a little bit overbought at this point. And because commodities in general are all testing at kind of resistance areas and starting sideways patterns here, I think we could actually see the Toronto Stock Exchange take a bit of a breather for a month or so, along with most other commodities. And then I think it could resume this trend and continue to go higher. But the price pattern that we see in the TSX right now over the past 6 or 7 months is the sign of exhaustion, that it's had a great run and it needs just some time trading sideways or lower to kind of cleanse the air for new people to get positioned into that index. And then it'll have a lot of energy, I think, to continue to run higher as crude pushes to multi-year highs, as precious metals start to break out and hit new highs. So I think there's still more upside, but it's going to probably struggle for a month or so.
What's going on in the cryptocurrency markets?
Yeah, crypto, Bitcoin down 9% as we're talking today. It tagged $30,000 about a week and a half ago, 2 weeks ago. It's close to tagging that level again today. I think you and I talked last time. We talked about how potentially it could drop all the way down to 16,000 as the next measured move on the chart. And this chart pattern, Bitcoin is under a lot of pressure. If 30,000 breaks, we could very, very quickly drop down to 16,000, potentially all the way down to 12,000, which are the two next levels that technical analysis is pointing to on this chart. So it's definitely in a downtrend. Sellers are in control. There was some talk about last night about the U.S. government being able to seize or get a hold of some accounts and funding for some illegal activity, and that actually sent a wave of shock through Bitcoin. It was a big volume spike, big sell-off last night in a bar when that news hit, because obviously Bitcoin's not, everybody wanted to get into Bitcoin originally because you don't get taxed, it's, not power controlled by the governments. Well, now countries are banning it and governments are trying to tax it, and now they're being able to track it in some ways. So it's kind of losing its shine for, I think, what a lot of people initially wanted it for. So it's going to be interesting. I think it's going to be out of favor for a while. This rally, this bubble that we saw in Bitcoin from early last year to the top around 65,000, that is a very similar bubble that Bitcoin has done 6 times in the past since 2010. The average pullback from one of these bubbles is roughly 74%. Right now it's only down 54%, so there's still lots of room for it to fall. And then it usually takes at least 1 year for it to stabilize, trade sideways, and for people to lose interest in it and then for new people to start to become interested in it and for the new cycle to repeat. So I think Bitcoin has had its time for a while. I think it's going to be out of favor. It's going to be a wild ride for the next year. But, it'll most likely continue to go higher down the road. It's had its heyday for a bit, and now it's fizzling out.
Chris, thank you so much for chatting with us.
Yeah, no problem, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.